What are tax credits and how do you calculate them? Well, to begin with, a tax credit is simply a reduction of the taxes that you owe to the government. The best way to describe a credit is to compare it to a deduction. So under the U.S. tax system, income is taxed. Basically, the government takes a percentage of your taxable income. Now, deductions are used to reduce what is your taxable income, to reduce the total amount of income that's taxed. So whatever percentage of tax assessed against that income would ultimately result in a lower amount because the income amount is less. Credits are a bit different. Credits allow you to, after you have calculated your tax liability to the government, a credit allows you to reduce the amount of taxes you owe by the amount of the credit. So it comes after the tax liability calculation is made. So there are three categories of tax credit. Some say two categories with subcategories beneath, but I'll break it into three categories. First, let's say the affirmative tax credit. And that means once you calculate your liability to the government, the tax credit will reduce your tax liability all the way down to zero and go further. So if you owe $1,500 in taxes and you are eligible for a $2,000 tax credit, an affirmative credit would reduce your tax liability further than zero. In fact, you would actually get money back from the government. You would get, in this scenario, $500 back from the government. A contingent tax credit is either partially refundable or non-refundable. A non-refundable tax credit can only take your tax liability down to zero, but it will not entitle you to receive anything back. In my example, where you owe $1,500 to the government and you have a potential $2,000 tax credit, the tax credit will reduce your liability to zero, but you will not receive any form of refund. A partially refundable contingent tax credit means that it will reduce your income down to zero, and then after that, whatever remains of the tax credit that is unused, you can use some portion or percentage of that to receive money back from the government. In our scenario where I owe $1,500 to the government, if I have a partially refundable tax credit of $2,000, it would reduce my tax liability down to zero. After that, I would look to see what percentage of the remaining $500 can I use in order to receive money back from the government. If it were a 50% refundable or partially refundable tax credit, that $500, I could use 50% of it to take my liability below zero and receive money back. In that case, instead of $500, I would receive $250, 50%, because in my scenario, that is the percentage of the partially refundable tax credit that I can use. Okay, one very popular form of affirmative tax credit is the earned income credit, and that is for low, moderate earners where they can receive a credit back against their tax liability. A very common or well-known form of partially refundable tax credit is the child tax credit. So in a nutshell, this is how tax credits are used under the U.S. tax system.